bother them, so I don't want to raise any rent, and then people end up being significantly under market rents. And when the because taxes go up, expenses go up, insurance go up, but if you don't increase the rent, all right, this is nothing to do with this. Moving on. What happens if my kid doesn't go to college and I saved in a 529? Okay, so in the best case scenario, you have nephews and nieces, you go to college, somebody's going to college, you can use that for that. In the worst case scenario, money that the part of it, basically you will have to take it out and just pay taxes on that. Okay, that's it, not a big deal. It is what it is. It's another way of growing money. If they don't go, that's fine. Is it smart to pay off a 2.5% mortgage early? Yes. All debt is risk. Okay. I owe a lot of money on my mortgages, actually $500,000 in mortgages currently. So debt is risk. If something happens, uh, properties need to be perfectly managed for the rest of their days to pay off that much money. Because I did buy some properties with 3% down. I do not recommend it anymore. Okay, I did not know many things. I was going a faster way, but now I do not recommend that, of course, to anybody. Now, uh, most of my properties have more than 20% equity in them. That's why I have this net worth, because what I owe minus what they worth minus what I owe, I'm left with this plus plus the retirement, of course. So uh, pa, 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 uh, where was I? A 2.5% mortgage. Should you pay it early? Yes. Follow uh, wealth game and pay it off as the ninth step of your wealth building. At that time, it doesn't matter that you can make potentially more spread somewhere else. The the safety and security, the peace that will come with paid off mortgage will worth it. I'm working between me and you. That's what I'm working on. I would like to our next property to be uh, mortgage free. Okay, I separate our personal finances from our business, although I am liable for that. If it's all gonna burn to nothing, I'm gonna sell my rentals. I would like to have my personal residence free and clear. Uh, is real estate better than index funds for building wealth? Ooh, that ChatGPT is a good question. When I look at some mutual funds that we invest our money with and help our clients to invest money, and if it's um, 12% annual return, and I'm looking at my own rentals and I make 10 to 12%, but I'm dealing with managing rentals, with the repairs, with everything that has to do with doing that. I'm thinking, man, I thought actually of that many times to get that money and put it into even a brokerage account for it to grow. And man, it's very tempting. It's very tempting. There are several ways to make money in real estate. If you have mortgage, tenants pay off the mortgage. Okay, so your mortgage lowers, so your uh, money in basically a loan minus the value. If your equity grows, right? You get some cash monthly. If you've done it well, you have to have cash. You should have cash. Now the value of the property grows. Okay, so it increases year after year after year, and um, it taxed differently than your regular 9 to 5. So these are the four ways to make money in real estate, at least with the kind that I do with the single family homes or smaller properties. This is what you can do. So what's better? It's definitely not passive. Well, I call it semi-passive because some properties I haven't been over a year. I don't go there often. There's not much stuff going on. Sometimes repairs here and there, like the dryer, but overall, it's still more work than buying mutual funds. You bought it, you made it on auto draft, and then money go in every paycheck, every month, money goes in. That's it. Don't worry about it. So it's very close. You need to be really good at investing in real estate to beat 12% return on your mutual funds. All right. As real estate, what's a good expense ratio inside my 401k? Ooh, good question. So Dave Ramsey recommends four mutual funds, four types: international, growth, uh, something something. I am not your guy for that. Um, Inside the mutual fund, there are hundreds of companies there, and so it's already diversified in the fund, and that's all the diversification I need for that. So I do not worry about, oh, I'm older, I need less riskier stuff. If my fund for the last 60 years um, uh, produced, I guess, 10 to 12% interest, that's all I need. Okay, in retirement is long-term investing. It's not for 2 years, 3 years. It's long term. So I'm willing to go right up and down. Uh, what is it? Up and to the right overall. So there's my answer for that. Should I pause retirement investing to save for a house? Yes, you can do that. Pause it for a couple of years, and it's not going to be a big problem with your accumulation of retirement um, investments. But you can buy a house and then you back in, turn it back on, and start put money away into retirement. How much should I save per month for each child's college? All right, so that's going to be different. You need to know where you assume your children want to go. Okay, if it's $100,000 a year college, you can just reverse. There's calculators for that as well. Just like compounding, you will need to know how long you have to save. If they just were born, it's 18 years, and you're a lawyer. You want them to be a lawyer. You want them to be a doctor. You want to probably have half a million or even more in 18 years. Who knows how much education will be with all these loans? It just goes up and up. So you can just reverse engineer, calculate where you want them to be, in state or anywhere else. Fancy college or in state could be very affordable. Um, can I retire with a mortgage? Not a good idea. This is, again, the biggest expense. You want to get these things taken care of before you retire. Okay, so how do wealthy people actually structure their investments?